when you tell people that they should buy these companies, especially people that are not
Mm-hmm.
in the investing sphere, but obviously we're now at a point where like the last 4 years, everybody has access to stocks, everybody's
Mm-hmm.
talking about stocks, all this kind of stuff. And so if you tell these people that these are the companies that they should own because they're not easily disruptible,
Mm-hmm.
they'll laugh at you because they
Yeah.
don't want to own. And obviously, like if you're just going off, what most of these people in retail go off of is, oh, look at the last year. I think like right
Yeah.
now, one of the biggest things on Twitter, for instance, is about Bitcoin, right?
Yeah.
They're like they laugh at people that talk about buying bonds or buying the S&P and talk about like, look at the performance of the last 10 years, right? And it's like,
Yeah.
dude, that's great that if you did buy Bitcoin 10 years ago, you've managed to outperform the market handily in the 1 decade, right? That's fantastic.
Yeah.
The issue is that can you replicate that over the next 40 years so that when
Right.
you come close to retirement age, you actually have money to show for it, right? Because when you talk about just a decade or even 5 years or 1 year or whatever, it's you get to the point where you have to duplicate that over and over again,
Mm.
where and all these other factors come into play, like can you time it, right? Do you have exit and entry strategy? Like, all right, you bought Bitcoin for $1. What was the thought process behind buying it for $1? It's at
Mm.
$100,000 right now.
Should you
What's the
sell?
thought process
Right.
of holding it or selling it? Like, how do you use that, right? Like,
Mm-hmm.
because it's different. It's different what you're doing than owning a business. You're not an owner in a business. What you're trying to do is just make money off of somebody else. Somebody's gonna
Yeah.
come and buy it for more than you paid for it. And that's just a risky game, and usually like statistics show that over the long term it never works. And that's kind of why
Mm-hmm.
most of these people end up underperforming the market.
Yeah. I think,
So,
and it
and that's
speaks to
and
like,
that's a fact, right?
yeah, I think it's Warren Buffett. I mean, I know the investors have said like the idea of, yeah, like they would never invest in gold, therefore they would never invest in Bitcoin. It's not like, oh, they're just shunning Bitcoin because it's not a tech that is valuable or cool, or like in the sense like it is a nice asset, in the sense like it is an innovation of like a technological gold or whatever you want to call it. It's not that. It's precisely that. Even if it was the new gold, it doesn't matter because it's like, how do you value it? Like you just value it on the basis that you expect somebody else to want it in some years, on just the basis of perception of people thinking that it's a valuable place to put your money in, but it doesn't have any it's not alive like a business is, right? So then it's no way for you, like Evan was saying, to know the entry or the exit point. It's more like you just kind of trying to catch up to a trend that you might think is longer or shorter.